Well, hello everyone, and thank you all for taking the time to attend my presentation on lead advisory and cross-border transactions in the post-pandemic era. My name, as Leon mentioned, is Benjamin Yeo, and I'm the current chair of the Moore Australia National Corporate Finance Committee and a director of the corporate finance team based in Moore Australia Melbourne Office. Obviously, my setting is very relevant to the circumstances we currently find ourselves in, as due to the COVID-19 pandemic, I'm presenting to you from my home office. Something which has become a very common scenario throughout 2020, however, one which we all hope will be a distant memory in 2021. In today's presentation, I will discuss the lead advisory service line, cross-border transactions, and provide you with a case study to highlight the effect COVID-19 is having and will continue to have in future cross-border transactions. My first topic is lead advisory services, where I hope to provide you all with a sound understanding of this exciting service line offered by Moore Australia to all Asia Pacific offices. It's my sincere hope that moving forward, collaboration between the Moore offices across the Asia Pacific will become more prevalent, not only in lead advisory transactions, however, across all complementary service lines. So what is lead advisory? While most of the Moore APAC offices provide transaction support services, including financial modelling, independent assurance, financial due diligence, valuation, and independent experts reports, the Australia office has the internal expertise to provide lead advisory services such as divestment and sales, mergers and acquisitions, takeovers, capital raisings, and strategic and feasibility advice. To provide you with a clear understanding of this service line, I'll run through the core competencies for each before moving on to discuss cross-border transactions in the Asia Pacific. Divestment and sales. When engaged to advise on a divestment or sale transaction, the key stages and services include the following. The discovery phase, whereby we gain an in-depth understanding of the business that is to be divested. This includes a sector analysis and recent transaction report covering divestments and sales that have occurred in the sector over the past 24 months. We use platforms such as S&P Global Market Intelligence, Accurus Merger Market, Refinitiv Company Fundamentals, IBISWorld, and Crunchbase, to name just a few. These platforms enable us to conduct an in-depth analysis on market sectors, industry trends, and comparable transactions across the Asia Pacific and global markets, producing reports that are both highly insightful as well as valuable to our clients. The capital structure is then assessed, fair market value calculated, and the most suitable transaction structure is determined that will give the greatest chance of a successful sale. Key to this is the creation of a tailored transaction process with a clear and concise marketing message that enables us to identify strategic buyers that would benefit from acquiring the business and then connecting with their key decision makers. As part of our engagement, we manage other transaction advisors also, including lawyers, auditors, independent valuers, and buy-side advisors to limit management distraction and to ensure that the impact to the daily management of the business is minimised. Once a suitable acquirer has been engaged, the formal negotiations of the transaction proceed, whereby we ensure price and terms are maximised. Finally, sale agreements are executed with the aid of independent legal advice, and the transaction is completed pending settlement. Mergers and acquisitions. With divestments and sales, we sit on the sell side of the transaction. However, with mergers and acquisitions, we sit on the buy side. The advisory styles between the two, while on different sides of the table, have similarities, hence the two services go hand in hand. When engaged by a client to provide M&A advisory services, we begin once again by understanding the business and then its strategy. This is crucial in enabling us to identify, evaluate, and then assess acquisition targets. We use the same platforms as we would for a sell-side transaction to analyse the market and discover who is active in the sector, determining and assessing likely competition, including strengths and weaknesses, and various funding options that are available, including debt, equity, or a hybrid of both. The benefit of being a member of the Moore Global Network is that when we are engaged to advise an M&A client, we can reach out to the regional offices and inquire if they have any potential strategic opportunities in their client base and facilitate a cross-border transaction, either domestically or internationally. Similar to the divestment and sales insight reports generated, the M&A strategy reports produced are incredibly insightful and as a result are a highly valued document by our clients. And in addition to the strategy reports, the development of a financial model for both the acquiring businesses as well as the business that is for sale are generated. This enables the value of both businesses to be assessed and provide insights into how the consolidated business will perform financially moving forward. This greatly assists in finalising the optimal acquisition structure and the funding options that are available. Furthermore, we manage the due diligence process to minimise risk in transaction documentation, including limited scope financial due diligence reports. However, unlike a sell-side transaction, once a suitable acquisition target has been engaged and the modelling and due diligence work completed, the formal negotiation of the transaction proceeds, whereby we ensure acquisition price is minimised and terms favourable to the acquirer. And once price and terms have been agreed, sale agreements are drawn up by the legal advisors, then executed, and the acquisition transaction is formally completed pending settlement once again. Takeovers. In addition to buy and sell side advisory, the corporate finance team is engaged to provide expert advice in both the defence and execution of takeover attempts. Like a game of chess, defending a takeover is a highly strategic, and with insights into motives, the ability to conduct extraordinary due diligence, and the competence to mediate stakeholders are key advisory skills essential to any successful takeover defence. Engaging an experienced corporate finance advisor who has worked on both sides of a takeover transaction is essential, and the Moore Australia Corporate Finance Division is fortunate to have a number of advisors with this required experience. Capital raisings. Having previously held the position of Head of Equity Capital Markets for Phillip Securities, conducting pre-IPO, initial public offerings and secondary market equity and debt capital raisings, I provide a unique network of investors across the Asia Pacific, as well as an ability to provide completely independent advice to companies on seed, pre-IPO and IPO capital raisings. As a result, the unique advice that the Moore Australia Corporate Finance Division can provide clients looking to raise capital either via equity, debt, or a hybrid of both includes advice on the optimal offer structure, capital structure and valuation, suitable candidates to act as chair, executive and non-executive directors of the board, assistance with preparation of historical and financial information, evaluation and appointment of advisors including lead managers and sponsoring brokers, assistance with drafting marketing materials including company presentation, term sheets and offer documents, the coordination of work streams in relation to offer marketing and stakeholder management. Having successfully raised over $1 billion during my career to date, the Moore Australia Corporate Finance Division is unique in its ability to raise capital through its extensive network throughout the APAC region. And I encourage all officers in the region to connect with the Moore Australia Corporate Finance team if any capital or debt raising opportunities present themselves. We're always available and always open to sharing our extensive networks. And finally, strategic and feasibility advice. This is the corporate finance consulting service in which we provide an array of financial advice, including creating deal strategies, analysing and assessing industry dynamics, providing independent advice on valuations and producing expert financial models, developing capital structures and advising on financing opportunities available in the current economic climate, managing stakeholders, including debt providers, identifying, evaluating and assessing potential targets and suitors, including capabilities fit, and mediate between businesses as an independent advisor. The 5 service lines I've just outlined make up the core lead advisory capabilities of the Moore Australia Corporate Finance Division. And I once again encourage all Moore officers across the Asia Pacific region to connect for the opportunity to collaborate, as that is what it's all about being a member of the Moore network. And now that you're aware of the core lead advisory service lines available out of Moore Australia, let's move onto Asia Pacific cross-border transactions in the post-pandemic era. With the world currently wrestling with the coronavirus and international travel heavily impacted, there is no doubt that the inability to conduct in-person due diligence has impacted on the execution of cross-border transactions. Despite this, there remains strong interest within the Asia Pacific region for M&A transactions to continue. And while the completion has slowed, slowed within the regions in comparison to others, it remains highly active. This is partially explained due to the low cash rate across the region that enables companies to transact when previously the cost of debt prohibited such transactions. Additionally, the market has been recently buoyed by the fact that there are multiple vaccinations being developed by global pharmaceutical companies scheduled to be released in the coming weeks and months. This will greatly assist the recovery from the effect of COVID-19 and see an increase in execution of those cross-border transactions within the Asia-Pacific region that have been on hold during the past 6 to 9 months. Moving forward, I will provide background to support my findings that those businesses brave enough to do deals in weak economic times such as these have historically been rewarded with positive outperformance. APAC's position in the global transaction market has grown significantly over the last 5 years. While it's smaller than that of North America's, the Asia Pacific's total transaction value was bigger than Europe's, and all indications are that this gap will increase due to COVID-19 creating sustained uncertainty across the European region. In saying this, however, cross-border transactions within our region have several unique attributes, including many companies in the region are not experienced in the inorganic growth model. This includes how to identify targets, close deals, and integrate new assets, and falls into the hands of lead advisory teams in the APAC region who can provide this expert advice. Small and medium-sized transactions are also most popular in our region. Compared with other regions, small and mid-sized deals, or those deals with a deal value less than US 500 million, are far more common in the Asia-Pacific region, making up approximately 50% by value, compared with 18% by value for the rest of the world. Once again, this falls directly into the market serviced by the Moore network. The minority deals represent almost half of all deal value. Transactions for APAC-based targets are far more likely to involve minority stakes rather than controlling stakes or full buyouts. As with smaller deals in the region, the prevalence of minority stake deals reflects the dynamic market within our region. Traditional private equity, institutional, and family office investors are expanding to earlier rounds of minority investment to ensure that they have access to potential or full acquisitions later on, especially regarding rapidly developing digital economy-driven targets. Clients within the Moore network should always be open to entertaining interest due to this. Investors are expanding into new industries instead of consolidating. A common deal strategy in any market is to buy multiple assets in the same industry and consolidate them to expand their footprint, capture synergies, and generate scale efficiencies. That strategy applies in APAC, but a relatively higher share of buyers in the region are now looking to explore new industries compared with those in the rest of the world due to the restriction of globalization as a result of COVID-19. Buyers are looking beyond, Investors are expanding into new industries instead of consolidating. A common deal strategy in any market is to buy multiple assets in the same industry and consolidate them to expand their footprint, capture synergies, and generate scale efficiencies. That strategy applies in the Asia Pacific, but a relatively higher share of buyers in the region are now looking to explore new industries compared with those in the rest of the world due to the restriction of globalization as a result of COVID-19. Buyers are looking beyond the traditional consolidation strategy to find growth in adjacent and differentiated industries, yet still create sustainable value. Even though economic growth in the Asia Pacific region is slowing, it remains higher than in any other market globally. As the Asia Pacific region is showing the prospect of prolonged weak economic growth due to the effects of COVID-19 on businesses, advisors need to be aware that historically, times of economic challenges in the APAC have represented opportunities for value-creating M&A activity. A review of approximately 1,500 transactions stretching back over 4 decades discovered several key findings as to how value creation was affected by the overall economy when the deal was struck, including a slow economy can lead to higher value creation. Deal makers achieved higher returns from investments made when the economy was weak due to valuations being lower as economic uncertainty gets priced into assets, less competition for assets as companies that may buy when during good times become more conservative during these times, and buyers that are active in down economies tend to be highly professional and experienced. Also, in weak economic times, diversification pays. Just like with the share portfolio, when the market has and continues to clearly reward buyers willing to branch out into adjacent sectors and diversify their revenue and earning streams. And finally, serial deal makers outperform in weak economic times. Those brave enough to do deals in weak economic times are actually rewarded with a positive outperformance. In the current COVID-19 affected market, 4 elements are critical for success in APAC transactions, including the ability to define a clear investment strategy. To capture the M&A opportunity, APAC management teams need to think of transactions not as occasional events, but as a continuous growth driver. In addition, they should develop a portfolio of transaction strategy that supports inorganic growth for both buying and selling assets. The willingness to make M&A capabilities a source of competitive advantage. Given the historically low number of deals that APAC companies have likely completed, the second major area for buyers in the region to address is finding ways to build up strong capabilities in sourcing and assessing transactions. Senior executives need to devote time and resources to corporate M&A by establishing an advisory team with broad functional, finance and industry experience and the ability to execute cross-border deals. The capability to focus on strategy during deal execution. Thorough due diligence is a critical aspect of deal execution, but buyers also need to analyse future growth plans, competitive dynamics, and industry fundamentals. The strategic due diligence process should be able to gauge the increase in market share that a buyer could generate by combining its assets with those of the target. And finally, always think about integration before the deal closes. Middle management makes successful transactions. Sophisticated buyers will ask the middle management team of any acquired company for ideas and insights about how to run the organisation and how it might continue to grow to ensure the business continuity. Buyers need to have the right monitoring and reporting mechanisms in place once a deal closes for any acquisition also. As economic expansion slows across APAC, companies need to turn to transactions to continue growing. This is true even with the recent market upheavals due to COVID-19 pandemic. Lead advisory transactions will only succeed if our clients understand the market, address their biggest internal challenges, and build key capabilities, opening opportunities for all service lines within the Moore network. And as deal activity picks up, companies that understand the market will be positioned to capitalise on it. Conversely, those that try to cling to old ways will be overtaken. So I once again encourage you all to reach out to your clients and ask them what their growth plans are as we rise out of the COVID-19 pandemic. And finally, I'd like to run you through a live cross-border transaction the Moore Australia corporate finance team in Melbourne are currently advising on. The Care Park Group is a long-standing business advisory client of Moore Australia's, in which we have provided significant advice over the life of the business. The company is an end-to-end parking service provider headquartered in Melbourne with a portfolio of over 450 owned and managed car parks across 6 countries, including Australia, New Zealand, Malaysia, Hungary, Poland, and the United Kingdom. With a property portfolio of over $330 million, the Care Park Group is of interest to many private equity and pension funds due to the forecasted increase in reliance on car parks as a direct result of COVID-19. The Moore Australia corporate finance team in Melbourne are currently engaged to manage interest from private equity and pension funds across Australia, Singapore, Hong Kong, and Japan, who are actively investigating the opportunity to invest and/or acquire the company and its portfolio of property assets, management agreements, and leases. The situation. The Care Park Group were eager to expand through acquisition, however, had exhausted their internal funding capacity. A financial investor was needed to inject funds into the business to enable the group to take advantage of a number of opportunities that are presented due to the disruptions caused by COVID-19. These include major car parking concessions and freehold opportunities in Australia, in addition to freehold opportunities across Malaysia, Hungary, Poland, and the United Kingdom. My team were engaged to identify potential buyers, analyse and model new acquisitions, including the highly complex concessions, and assist in negotiating financial debts for key stakeholders. The action. Finding the investors. In conjunction with major shareholder Far East Consortium, we conducted a global search for the Care Park Group, whereby we reached out to over 10 strategic buyers across 5 countries. Our aim was not to simply find a financial investor for the business, but to find one who shared a similar vision for its expansion. This highly strategic search ensured only those we intended to disclose this opportunity to were privy to any detailed information on the group. Those we introduced the opportunity to included Macquarie Capital, KKR Asia, Blackstone, Everbright, GIC Real Estate, M&G Prudential, Goldman Sachs, Rothschild, and Cerberus Capital. Communicating the value. We created an information memorandum and a consolidated financial model with forecast to present the investment opportunity to buyers around the world. We facilitated numerous meetings, all via video conference, in which the information was reviewed and a Q&A portal managed, without ever once meeting in person. This form of communication was a direct result of the inability to travel due to COVID-19. And despite the quantum of investment being sought exceeding $500 million, all parties became highly proficient in presenting via video and garnering the level of trust required. I'm confident that this has become the new normal in initial communications, which saves substantial amounts of time and funds. However, we will most likely be required to travel to close this transaction out. Adding value. We further assisted the group by developing scenario models, investment pipeline analysis reports, and case studies to showcase the group's ability to expedite growth through bolt-on acquisitions. Our objective was to optimize flexibility for the business, as well as address the interests of both parties in the investment structure. Doing the deal. We are currently in the process of garnering indicative letters of offer outlining terms of funding to support and expedite the growth of the group across the APAC and European regions. Our final action for the Care Park Group, yet to begin, is a renegotiation of the terms and conditions of the company's bank debts to reflect the new operating conditions and increased market value of the business, which is yet to be conducted. This is a perfect example of a cross-border transaction that involves both the business advisory and corporate finance divisions within Moore Australia, negotiating substantial investments with groups across the Asia Pacific to fund acquisitions of car parking assets within our region and Europe, which have presented themselves due to the COVID-19 pandemic. Many thanks for your time, and if you have any questions about anything I presented on today, please do not hesitate to ask. Thank you.